All right, good evening, everybody. I believe you can hear me tonight. Okay, so all right, we started talking about a few things yesterday, and we started talking about Fibonacci retracement. Fibonacci is a very powerful tool, and let me tell you something. Every professional trader uses Fibonacci. Every professional trader uses Fibonacci as a complementary or additional tool in his toolbox to determine his entry and sometimes exit. There's something called Fibonacci extension. Fibonacci extension. We have not talked about that, but for now, our focus is just Fibonacci retracement. Fibonacci extension can be used in setting your take profits, and you can use it for other reasons. But then, my focus in this class is Fibonacci retracement. I don't think I'll be touching Fibonacci extension in your class, but then it's important to learn Fibonacci retracement. Retracement is just like Fibonacci retracement is just used to identify the end of a pullback. The end of a pullback. It gives you it's a very powerful tool in the sense that it allows you to catch a move, an impulsive move from the very beginning. That is one of the reasons why I love Fibonacci. It allows you to be able to catch a move, an impulsive move from the very beginning, from the very, very beginning. That's the beauty of Fibonacci. That's the beauty of it. And I'd like you to pay attention to learning it very well. Okay, and I'm going to go through again today. You can spend the whole week talking about Fibonacci just to make sure that you create that neural path in your subconsciousness, so that it's one of those tools that you're very much likely to forget when you're analyzing the market, but don't forget to use it also. I also like to add this, that not every time, not every trade you're going to be taking that we need Fibonacci, that you use Fibonacci. There are times it does not even work. All the levels are not respected. And there are times you need to trade a ranging market. You need to trade a ranging market. And you need to enter from support, and for example, the gold trade today does not need anything Fibonacci. Just start selling from the resistance. So you cannot use Fibonacci for that kind of signal. So it's about knowing the end of a pullback. It's about knowing the end of a pullback, and that's the essence of Fibonacci. So, but yesterday we were talking about. Let me read the slide to you again. We were talking about what you could combine Fibonacci with. What and what you could combine Fibonacci with. And you must pay attention to that. You must pay attention to that. Always combine Fibonacci with structure. Look at what is on my screen. What's my screen now is combining Fibonacci with previous support and resistance. Combining Fibonacci with previous support and resistance. Combining Fibonacci with previous demand and supply. Combining Fibonacci with previous demand and supply. You can also combine Fibonacci with trend line. Combine Fibonacci with trend line bounce, or trend line breakout. And if we use moving average that I've taught you before, you can combine Fibonacci with moving average. Combine Fibonacci with demand and supply. It should not work alone. Even though sometimes it could work alone and you still make profit, but don't get used to entering trade based on Fibonacci. Based on Fibonacci alone, it may not be the best. And the power of confidence professionally, as you grow in trading, you want to have confidence before you enter a trade. You want to have confidence. You want to have many indices saying the same thing. At least you have multiple indices. Fibonacci, moving average, demand and supply and the likes. You want to have them saying the same thing, and to give you a clue. So when you have confidence, you have better chance, or you have better chances of making profits in your trade when you have confidence. Confidence is about when you have multiple parameters, multiple indices saying the same thing, multiple signals, multiple indicators saying the same thing. For example, you combine Fibonacci with support and resistance, both of them, they are telling you to buy. And then you just imagine combine Fibonacci retracement plus support and resistance plus candlestick reversal pattern. And that's the thing. That Fibonacci level is telling you to buy, and then on that same level where it's asking you to buy, whether level 23, 38.2 or level 50 or level 61.8 or level 78.6, and it's telling you to buy. Then on the same level where it's asking you to buy, you are seeing a previous support or previous resistance, and then on that same spot, you are now seeing a bullish reversal candle. You are seeing a pin bar. You are seeing a bullish engulfing, or you are seeing an army, or you are seeing a piercing candle, and you're seeing candles that are just reversal candle that are just telling you, guys, it's time to go long. It's time to go long. You are seeing a doji, and then another candle close after doji that engulfs the doji. So these are the things. That means in such a way now you are combining Fibonacci with previous support and resistance and reversal candlesticks. When the three of them are telling you the same thing, it's a better chance. It's most likely you will end in profit. It doesn't mean that when all these things are also met, that you will never lose at all. No, because sometimes a news can come in. Sometimes you see an investor can come in. Sometimes maybe that's when a bank or a big bank somewhere are just finished loading their order. There are times when you lose, you honorably lose, because you see somebody just entering the market. At that time, maybe a big bank in America or in China or in UK, they just finish loading their order. Market will reverse, or market might go against you, or maybe if they load in opposite direction to your signal. So don't kill yourself. Don't be angry with yourself because you lose a trade. But all that you need actually is to have quality setup. What a professional trader is focused on is quality setup, because he knows that there are times he could lose. Losing is part of the game. So don't kill yourself when you lose a trade. Your focus should be having quality setup on your choosing instrument. Having quality setup should be your focus. Okay, so I just want to quickly go to the chart. And then and let's just back test me about a year, maybe also, or like let's say 2-3, just a couple of months. Let's just back test couple of months on gold and probably on GBP USD, and that's what I want us to do tonight. Okay, so let's go there. Are you seeing my screen now? If you can see my screen, just type one in the comment section. Just type one in the comment section if you can see my screen. But I don't want to take so much time tonight. I'll just go straight because I believe you can also watch the video afterwards. Now look at my screen here now. Look at this. I just drew this. This is gold on 1 hour time frame, and this is what happened. I think last Friday. If you draw your Fibonacci retracement level, your Fibonacci retracement, use the tool to draw an upward. You know, a Fibonacci from the swing low to swing high. You draw it upward. You discover that on the golden level, that is 61.8. On 61.8, you can literally you can see that on this level, on this 61.8, you can see, you know, see a previous support was there, a previous support. And if you extend it further to the future, let me use horizontal line. You see a previous support at that level 61.8. You see a support here, and then you look at it into the future, you will see there was a resistance in the past. There was a resistance in the past, and then you look at it again, you see that a strong rejection has occurred on 61.8 retracement level. So what do? If you're a conservative trader, you're going to wait for the next candle to form and engulf the previous one. For example, at the close of this candle now, you're supposed to take your trade and just be patient until it rolls. And look at gold. Gold roll for 563 pips, 559 pips, 559 pips, and that's incredible. That's amazing. So let's go again to the past. Okay, so let's say I have there's some other example that I had somewhere. I have okay. Even if you draw something like this, you draw from this swing low to this swing high, and you see 61.8 again, and the level of 61.8. You're also seeing a support. A support is formed at that same spot where you're seeing Fibonacci retrace 61.8 level. You're seeing this support. This support. You're seeing the support is formed here, and then the price is pulling back. How do you know the end of the pullback? On 61.8, we're seeing a pullback, and then price move to the upside. And you see support here, support here, and then support here, and then support here. It's a very strong level, and price was rejected and went to the upside. So don't just take a trade because you are seeing a Fibonacci retracement level, price rejected there. Is it on the support? Does it follow a trend line? Or something, or demand and supply somewhere? That's another example. So let's see if we can have much more examples somewhere. Let's look at this. You do something like this. Okay, and then price came to that level 50, but not exactly, but we are seeing a rejection. At this somewhere, this zone. You're seeing the rejection here, and then you're seeing that level 50. Although this is not so perfect, if you take this way, you're probably following this resistance that is here, and then let's see if you can have another example in the past. Okay, have another example in the past. Another example in the past. Okay, so let's see if you can have something like this. Price pull to the upside. Price pull to the upside. And here we go again. Here we go again. Level 61.8. And then if you look, does it fall on top any resistance somewhere? Now you can see. You can see resistance here. You can see resistance here. You can see there was a resistance here. And then it also follows. I was in line and aligning with what was there. You can see like that. You can see that swing, and then when you are seeing that rejection on level 61.8, you are seeing this is the piercing candle. Now this is the candle I was trying to explain to you yesterday. A piercing candle, and then it goes and on and on and on and on and on like that. So anytime you are seeing, when the market is trending, actually this work very well when the market is trending. When the market is trending, I told you yesterday that you are not going to be using Fibonacci retracement level on a ranging market, but in an uptrend or downtrend, you can use Fibonacci retracement very, very well. Now let's go to GBP USD. Let's go to GBP USD and let's see what is happening here. So let's see what happened last Friday on GBP USD. GBP USD price goes to the upside, and then we can see it on level 61.8. Same level 61.8. You can see the price was rejected, and then we have this. The pullback was ending. Then we have this. You can see this level of support here. You can see level of support here. Then you can see support here. So you will draw your horizontal line now. You see that it cut across different support, and this is where this was holding. And if you have entered this trade, you'll have gained some pips. You will have gained some pip because of that rejection. Then you have well, let's see if you have. And don't forget another thing I was saying yesterday: a single push, just one push. Then look at what we're looking at here. This is 38.2. This is 38.2 retracement level. 38.2 retracement level. So you can see on the 80 is 38.2. Then if you look at it, there was a support there, a resistance turn support. So if you draw your horizontal line, you will see the price actually respected this horizontal this resistance have become support in the past. So that's how to use Fibonacci retracement levels. So it's a very interesting tool. It's a very, very interesting tool, and you will love it, especially when the market is trending. It's so sweet to use. Fibonacci retracement level. Tomorrow I'm still going to go further, or probably if I'm chance during the day, I'll be recording another video for you that that was I just wanted to get it. Maybe some other tips. One of the ways I don't like to say so many things in a single video so that you can actually grab it. So that you can grab it. You can see level 50 here, level between 50 and 61.8, and then you can see a rejection here also. So it's you must always use Fibonacci with something. Either use it with trend line. Let me even see whether I use it with a trend line or use it with support or resistance, or use it with moving average. If you are the one using moving average, look at this. I do my Fibonacci level here, and then you can see that on 61.8, you can see this rejection, which also align with the previous support, and then it just align. And then as I look, the moment this candle is formed, I'm going to be taking my sell, and then I follow it down. That's the beautiful thing about Fibonacci retracement. It helps you to enter trade from the very beginning, of a new of an impulsive movement. And don't forget, I told you that a day trader, this is very important for a day trader actually, and for everyone else. Very important for a day trader and everyone else. The beauty of it is that, like I told you in the past, I said a day trader is someone who enters trade at the beginning of an impulsive movement and comes out before the end of it. He entered the trade at the beginning of an impulsive movement and comes out before the end of it. That is a day trader. That is a day trader. And look at this now. I draw from a swing low to the swing high. On 30.2, I'm seeing a rejection, and this rejection aligns with the previous support in this place, and then I enter my trade and I follow it up. That's just it. It's so simple. It's not difficult to use at all. It's very, very simple, and you're going to love it. You're going to love it. Just pay attention to it, practice it again. Today now, the assignment is the same assignment I give you today. This time around, give me 10 examples. 10 examples. You're going to draw your 10 5, sorry, let's do 5 uptrend, 10 down, 5 downtrends, 5 uptrend, 5 downtrends. You just draw your Fibonacci level and you discover that, oh boy, 5 uptrend, you show me the level that is being obeyed, whether 38.2 or 50 or 61.8 or I think 61.8 or 78.6 to can be respected. And then you will now tell me the level, you tell me the candle, you tell me if you tell me the confluence that is following, you tell me the confluence that follows your that's aligning with your Fibonacci. The confluence aligning with your Fibonacci, because today now most of your assignment is not showing the confluence, not showing the confluence. So it's important that you show me the confluence. Look at it. I drove from my swing low to swing high, and then price came to reject at 30.2, and they say 30.2 is just somewhere. It's just the resistance turn support. Resistance turn support. That's just how it works. It's very beautiful. You will love it. I'm telling you, will love Fibonacci. Okay. If I were you, as I will name my pet Fibonacci. If I were you, I'm buying a dog. If you're buying a pet tomorrow, buying a pet, just name that pet Fibonacci. Oh my goodness, I'm just kidding anyway. But that's how important it can be. Or you can write it on your own. If you have a trade, if you have a trade station, like a trade corner somewhere. So if, for example, if you check my room, you see my trade corner somewhere around there. I don't know if you can see my curve length, my curve screen here. It's 49 inches screen. You see, there are certain things I wrote, somewhere, just to remind me every single time, so that I will not forget them. I will not forget to pay attention to certain things. So if you have a trade station somewhere, just write it somewhere: Fibonacci, 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 Fibonacci retracement level 30.2, 50, 61.8, or there's also a Fibonacci level of 23.6. I didn't talk about that one because if you look at my Fibonacci, you see another point there. It's called 23.6. It's also a very important levels. But for the purpose of this class, I just limit your attention to 30.2, 50, and 61.8. Those three are amazing. They are amazing. They are amazing. So keep them in mind, use them, practice them. Make sure you submit assignment before the beginning of tomorrow's class, and then we'll go again. You see how much you can also cover again tomorrow. Make sure you study. Make sure you do your assignment. Make sure you back test. Okay, I'll see you again tomorrow in class. If you have questions, please drop it on WhatsApp group. I will attend to them. If you drop it when I'm not online on that line, definitely when I come back online, I'll attend to all your questions. Thank you and see you tomorrow. Good night.